Now let's get to today's feature segment on the fear trade with David Kula, CEO and Chief Investment Strategist at Mainstay Capital Management. Hey, thank you very much for coming on.
Hi, Sean.
So we've had quite the week here, and where do you see us sitting right now? And we've had some days where we thought everything was falling apart. We thought maybe trade was going to get better. Then we get the negative economic data. If you're an investor, where are you viewing things right now?
Well, it has been an up and down market. We've had a lot of days where we've had a better than 1% move, a better than 2% move, and even a better than 3% move, either up or down in the markets, and that's caused a lot of jitters, a lot of volatility. So, in an environment like this, and there's a lot of macro data that's coming at us, we've got some of these economic numbers that are coming out, some making us feel better, some making us feel worse, and some concerns about where the economy is headed and where the market is headed. And we still are constructive on the stock market moving forward, but we understand why investors have some concerns. 10.5 years into a bull market, concerns about the economy. So we think it's prudent for investors to look for hedges for their portfolio. A couple of places or a couple of ways that they can do that. One that's been a very good hedge in portfolios over the past year are REITs, real estate investment trusts. They worked very well in the fourth quarter, a positive return when the stock market, the S&P 500 was down 19% in the fourth quarter. REITs were positive. And then through this year, REITs have basically kept pace with the S&P 500 while the S&P 500 has been moving up. On those down days, we've had REITs with positive returns on many days. They have essentially a non-correlation with the S&P 500. Another good hedge, more recently in the past few months, has been gold, precious metal, specifically gold though, which has a negative correlation with stocks. And those, especially on those significant down days, like when we've had a 3% down day in stocks, we see gold up 1 or 2%. And so that gives you a good feeling when you see that something in your portfolio that's green when a lot of the stocks are red on those days, and still a good positive total return.
And so it's interesting you bring up gold, because it kind of feel like gold got put on the back burner for quite a while. And then you're right, all of a sudden it was front and center again. Do you view that as gold being looked at as maybe a safety play from economic weakness, or just a hedge against central banks getting in there and starting to meddle in markets with policy? What do you view the sudden interest in gold again on?
I think gold wins in two ways right now. Number one is the fear trade. It is a go-to investment when investors are concerned about volatility in the stock market, are concerned about geopolitical tension. It is a safe haven investment that investors go to. It is a fear trade. Investors will go to gold. It's also winning right now because of a secular trend, and that is that we're seeing interest rates around the world. We call this race to the bottom. Interest rates around the world going to zero and really going negative. When we look at sovereign debt around the world, or just debt in general, earlier this week, the amount of debt trading at a negative yield crossed 15 trillion. Last night it crossed 16 trillion. And as rates continue to come down and yields continue to go negative, more and more debt trading at lower and lower yield or a negative yield, something like gold becomes more attractive. Currencies, fiat currencies are continuing to devalue. Gold becomes attractive in that environment. So a combination of the fear trade and the devaluing of fiat currencies, this is a great environment for gold.
And I think it's interesting you bring up REITs, and I think there's always interest in getting into real estate as an asset class. Do you have a particular area of real estate that you're looking at? Because once you say I'm going to go into real estate, then you start looking at what part of that real estate market do you want to get into. So is there specific REITs that you're looking at? Or are you looking at maybe it's more of an exchange traded product? How do you view getting exposure to real estate if you are an investor looking to do that?
Well, I like to do it through commingled pools, and right now we like residential real estate and also industrial real estate. Certainly real estate benefits from lower interest rates, and interest rates are coming down. Real estate benefits from lower rates the way that bonds do. We're seeing a lot of mortgages continue to come down. So in a environment where rates are coming down, REITs are going to do better, and the environment we're in, the fundamentals for REITs look good. interest rates coming down, that's a formula for REITs to do well. So where we have REITs as a good defensive part of our portfolio in an environment where the fundamentals are good, an environment like this where the S&P 500 has been doing well this year, but REITs are doing well also, we have something that can give us a counter-cyclical nature to the stocks in our portfolio, but not hurt us from a total return standpoint, actually benefit us from a total return standpoint in the portfolio.
And then I guess, I would say the same thing for gold. So if you're an investor looking to get exposure to gold as an asset class, you don't want to go out there and start buying up gold futures, which is understandable. But so if you're looking at gold, then you have to get into, how do I want to get exposure? Because you can get into, looking at miners. You can look at some other gold ETFs. How do you view getting exposure in that space?
Yeah, so we recommend doing it through an ETF as well. And you can do that through an ETF such as GLD, or you can do that through a commingled pool as well. And some people own gold bullion directly, but in a portfolio, a commingled pool. And there's also gold miner stocks that you can own, and we call that gold on steroids, because the gold miners will actually have a much higher beta than the gold bullion. Gold this year is up 16-17% year to date. Some of the gold mining stocks are up 40 or 50% year to date, but also have that, even though they're equities, have that negative correlation to the S&P 500. So that still, for those that, not for the faint of heart, if you're willing to take on more of a higher beta play, the gold mining stocks are a way to get that exposure with as we say, gold on steroids, by buying the gold miners.
And then one last thing I want to look at here, because it's in your notes, and I think it's interesting. And I get the real estate and gold is sort of, we'll call it a lower volatility way in an uncorrelated asset to put in your portfolio. But you also talk about Bitcoin being some like digital gold. So I get where you're going with that, but then you also have the potential to introduce more volatility in the portfolio if you go too big on that. What do you think about Bitcoin as something that maybe look at to include in a portfolio? Yeah,
the real differentiator here that I have between when I talk about Bitcoin and Bitcoin as an up-and-coming digital gold is, what you won't hear me say is Bitcoin is a safe haven asset class.
Okay.
You will never hear me say that. You will hear me say that Bitcoin is non-correlated with stocks, and you can do the math. Bitcoin has a negative correlation with stocks, like gold does, and like some other negatively correlated asset classes do with stocks. Bitcoin has that negative correlation. But because it is so volatile, I would only hold it, and if you were going to hold it, if you're willing to hold it in a portfolio, in a very, very, very small allocation, But it has proven to have, over time, and we've looked at over many time horizons, a negative, not just a non-correlation, but a negative correlation with stocks. So it can offer a diversification component in a portfolio as well. But because it is so volatile, I will not call it a safe haven asset. I'll call it a non-correlated asset with stocks, a negatively correlated asset. But if you were willing to hold any Bitcoin in a very, very small allocation.
Interesting. I think that's a good point though to bring in, that a lot of people are asking, what should I be doing right now? But it's just, here's something you can get returned, but you won't, on days where the market's going crazy, you might have a little bit of an anchor in the portfolio. So I think it's a good message to get out to investors right now. So thank you very much for coming on. We're going to have to leave it there.
All right.
Thanks. Once again, that was David Colas, CEO and Chief Investment Strategist at Mainstay Capital Management.